Alright, so before I get into this video, I just want you guys to know that I'm not no special trading guru, nothing like that. I'm not trying to teach anybody anything. This is just my own personal trading results that I wanted to go over this weekend and talk to you guys about it. So anyways, yeah, let's get into it. Alright, so I'm not a professional financial advisor or anything like that. These are just my own personal results. But anyways, if you guys have seen the video from last week, breaking down the previous week's results, basically what happened was it was just a losing streak in the market. This is like, keep in mind though, this is only 4%. Like this right here, this losing streak that I had, this is only a 4% drawdown. So it's like, I'm not even worried about that. So you guys got to keep that in mind. Like, risk management plays a very, very, very important role in trading. So this big steep drawdown, that's only like 4% of the account, so I don't really care. And on a personal account, that's going to be about 8% because I'm risking 10% instead of 5% over the course of 50 trades. So I'm losing 10% over 50 trades instead of 5%, which I do with this. So the equity curve would have looked a little bit steeper. But basically, that was last week. And I also noticed a pattern too, is the weeks, because like the fourth quarter of the year around Christmas time is a little crazy. I've been noticing because of all the bank holidays and stuff like that. So, but what I've noticed is my very good weeks are weeks where we don't have bank holidays, and I noticed that like my drawdown weeks are usually the weeks where I have where there was bank holidays. So I'm excited to see where I'm at, like the first, second, and third quarter of the year. But that's just the timing in the market at the time of year is something I'm becoming more aware of. Just because of the fundamental issues that it can cause, like I've been noticing with the bank holidays. So I'm going to, at the beginning of this year, this new year that's coming up, I'm going to get 4 new journals, one for each season. So like the first quarter of the year, I'm going to write down anything for that first quarter of the year that I'm working on, I write it down and all that, and then do the same thing for the other quarters. But we started out this week really good. This whole week actually was really good. So what I did this week was I found last week, for the past couple weeks, I've been having a problem with my leverage. My risk management, right? So the way that I trade, I take a lot of trades. So I'm trading like 20 different pairs, and I take 3 different trade setups. Like every day I'll get 1 to 3 good setups on a pair, on each pair, in my trading session. So like 1 to 3 good setups, and if we do the maximum, 3 times 20 is 60. So that's about 60 trades a night. So what was happening was, I was risking 0.2% of the account on each trade idea. So if I'm taking like 200 to 300 trades in a week, I need to be able to lose. The way that I do it is, since my strategy has a 50% win rate, right? Over the course of months and months, it's proven to me it has like a 50% win rate with a 1.5 to 1 risk reward ratio. And so what I want to be able to do is I want to lose 5% over 50 trades. It depends on your account size and the account rules. For prop firms, it's going to be 5% over. For me, the rules are my own personal rules. Like if I have a personal account, I only want to have 10% overall risk exposure. And so what I was noticing was an adjustment that I made is basically, since I'm taking a lot of positions, I actually end up getting cut off with the positions that I can take to around Wednesday. It's not because I'm over risking on or anything. Like my overall risk exposure is I'm losing 10% over 50 trades. So I'm not worried about all my trades hitting stop loss. And blowing my account. I'm not worried about that because all my trades, if they were to hit stop loss at that time, I would only lose like 5% of the account, which it's not a big deal, right? But the problem I was running into is the valid trade setups that I have, I need to lower down my risk because the capital was being eaten up by my winning trades. Like the cost of being in that trade, it was costing me. So I never really had that problem on a personal account, but with like the background stuff that I'm doing, like the background projects and trying to contact different hedge funds and prop firms because I want more long-term contracts with infinite scaling for my long-term goals that I want to have. But I want to be able to infinitely scale with and have a partnership with somebody. So that would be like a big bank or a hedge fund. And I just need to put up, I think it's like 6 months to 3 years of data, which honestly I have about 6 months of hard proof data. So I can get like a very kind of like a bottom position and then just keep proving myself. I can start out with a pretty decent account and then, start proving myself. And, each month that I prove myself, they'll add more to the account and basically infinite scaling. So they're always adding more and more and more the more that you prove yourself. And so that's kind of why this has been a problem for me with the leverage and being able to keep a constant churn of trades is because I want to eventually make it an automated system so then I can create my own hedge fund in the future where I can just basically I can create a business on the side managing other people's money and get my license for that and everything and then become my own personal retirement fund for my community that I live in. I can become a retirement fund for them or my own personal hedge fund on the side and everything. So that was a big problem is I need to figure out the whole leverage thing because with 1 to 500 that's not going to cut it because that was never really a problem for me. But using 1 to 50 leverage or something because once you start dealing with more capital, trust becomes a very big thing. And, that's going to become a very big thing for me is being able to trust my broker that I'm, putting very big amounts of capital into. But what I noticed anyways was I wasn't able to keep that constant churn of trades because I was taking a bunch of trades and then around Wednesday, my margin is just too much for the rest of the week to be in a safe spot to where it can handle drawdown and a couple losing trades. I need to make sure the money that I can spend in the account or lose in the account, I need to make sure that that's not being eaten up by open trades because I need to be able to have enough room in the account to deal with the ebb and flows in the market. And what was happening was even on my valid trade setups, I was still taking too big of a risk because the cost to be in that trade was too much. And so I'm not able to keep a constant, flow of trades. So I was just kind of imagining if I can keep a constant flow of trades, I'm holding them over the weekend and I'm taking every single trade setup, I'm not having to deal without the margin. I'm going to have the capital free to be able to get in the trade. And I just needed to because what that's going to do for me is make my results more consistent instead of having 1 week where it's really good. I actually have the data from this week to actually show it. So I should be kind of using that to my advantage here. But basically since I was using the double the lot size here, what this would be a good week because what was happening was I was closing my trades before the weekends and I was I was getting cut off with as many trades that I was taking towards the end of the week. So I wasn't able to capitalize on Wednesday and Thursday night. It was pretty much only the trades from the beginning of the week that were playing out that basically were being tracked. And so since I got a more realistic data set of, keeping a proper churn of trades, not having to worry about any risk management factors or anything, what I found this week was basically this whole up push movement would be here's my good week and then here's my bad week, right? And so we see this is the bad week and we see that the impulsive moves to the downside per se are pretty much the same. And if you look at, let me pull up an old account. Okay, so this is the older account that I did a couple weeks ago. I think basically this account was Thanksgiving week, right? And so we see that here was that bad week that I had. There was also a couple personal errors that I made within that week. And then we see that next week I pretty much just took off. And I think what happened here was the lot size compared it costs a lot more once your account size starts getting bigger. The cost and spreads so with these accounts it's taking into consideration with spread, the cost of being in the trade and all of that. And when you have a lower account size, since this account right here was $10,000, the lower account size I was only using 0.02 lots. So that's a really low lot size and it doesn't cost a lot to be in a trade like that with 1 to 30 leverage. And so basically, since it's only costing like $30 to be in the trade, I'm only going to be losing, it costs $30 to be in the trade, but I'm only going to be losing, like $12 on that trade if I'm using a 0.02 lot size. And so basically we see that with a constant churn, we have like this up move and then down move and then push. So basically this is the retracement. And on this week's results for this account, we had last week, we see that it just comes down. And then, so basically at the beginning of the week, I was just keeping a constant flow. I was focusing on my execution, making sure that everything was good. And pretty much throughout the whole week, I was able to keep a stable mind and, got data from the chart, from the strategy. No personal errors, didn't have any personal errors this week. I was just looking at it from an objective view, and I saw that, hey, this is good. What I'm doing is working. Having a lower lot size enabled me this week. Splitting my lot size in half enabled me to have that constant churn of new trades instead of being kind of like having my potential capped towards the end of the week because of, I had these winning trades that were running, but they had like bigger sizes on them. So, it was costing me a little bit more to be in that trade than letting my edge fully play out instead of just kind of like being, I guess what it was doing was I was capping myself. And so I just kind of figure out a way around that. But we see that we just kind of like the count pretty much took off. And then Friday night I ended up having a bunch of losers, which pretty much this is actually a 2% drawdown. So since my lot sizes were cut in half, this is actually right here. If I was using double my lot size like I was last week, the account would actually be at break even because I would have had, since I lost 4% here, right? And if I kept my lot size the same, instead of splitting it this week, it was a good week. And so with those doubled lot size, it's not a bad thing. I still would have been risking, I think it would have been 10% instead of 5. Or no, it would have been 5% overall that I would have lost. So like my risk is already still like locked in with these trades. It was just, to be able to, with as many trades that I'm taking, I need to cut my lot size in half because of the amount of trades that I'm taking, to be able to have it kind of automated, like super, consistent. But basically, here's a 4% loss, and then this is actually a 6% gain. So we go pretty much from like 8,000 to, we'll call it from 8,000 to 2,000, which is $6,000. That's 3%. But if I was using double the lot size, the same lot size as the previous week, it would have been, same lot size as the previous like 2 months, I should say. Keeping it at a 5% risk over 50 trades instead of losing 5% over 100 trades now. But basically this would have been, since this is a 6% gain right here, 3% gain right here, multiply that by 2 would be 6%. So the account would have been the account would have had a 2% profit. And then we see that we have pretty much like, or it would have had, a 2% profit. And then we see that, this drawdown is pretty much about 2%. So the account would have been in a break even to a drawdown of maximum 2% overall. So for the week, that would have put us at either break even or a drawdown of 2% on the account. Overall on the monthly term, because that's how I have to be looking at my strategy. I can't be looking on the daily or an individual week. I'm not a day trader. I might be an intraday trader, but I like to consider myself a swing trader because I'm holding trades over the weekend. My trades are taking pretty much 8 days to complete. Like that's pretty much the longest time, and it depends on if the market's going to consolidate. The longest holding time that I've ever had for a trade, I think, was like 15 days though. And it's not just the way that I trade. I'm a swing trader, but keeping that constant flux of trades is important to me because it's keeping a consistent income, keeping things consistent. And so this is what my equity curve, I've gotten my leverage and things locked in to where basically I made it to where a robot can run it for me. And that's what these big hedge funds and banks are looking for. And that's something that I have now. So I'm going to be able to, I just need to put up the track record with that, which is what I'm doing here. And, I'll be able to track some long-term contracts and stuff like that. But basically I've figured out my leverage and what I need to do, what I would need to adjust Let's just say it's the little knobs and stuff that you need to adjust and kind of get in the right sequence with each other. And I think I have done that to a point to where I know I'm not going to win every single trade. I know I'm going to have drawdowns, but I figured out my leverage and how hard I can really push with. I've kind of it's called trading in the zone. That's the best way that I can explain it. Is like I'm kind of in tune with what I'm doing and everything that I'm doing, and I'm pretty much in the maximization stages of my trading. Like I've figured it out, and now I'm just optimizing. I'm focusing on what setups are the best setups to take now. I'm not adjusting the way that I look at the market anymore. I figured out it's like having a base. Like I have a base of, I just like the time frames that I use and the levels that I use to enter. That pretty much never changes. It's the way that, okay, maybe I need to open up my stop losses a little bit more, or maybe I need to focus. I have two different types of setups that I take. Maybe this one setup right here, maybe my break and retest setups are the better ones to take. Maybe the reversal trades are the best trades to take. Maybe I should take those ones out because I'm noticing that they're not just over time, over months of using the same strategy, almost 8 months of being consistent. 8 months back to back with hard physical data being consistent, not every week, but every month on a consistent basis. I've learned for my own strategy and my own personal way that I trade, I have learned that maybe these reversal setups that I'm taking, this was a thought that also went, that was going through my head pretty much last week when I was trading. It's Sunday morning now. But last week when I was trading, these thoughts that were going through my head was maybe my reversal setups that I'm taking are not the best setups to be taking. Maybe I should just focus on the break and retest. So that's one thing that I'm going to be back testing. Another thing that I was going to be back testing was I need a couple more weeks of data to see how, if I can up my lot size at all to be able to make, I would be risking more, but to make a greater return. Or if I need to stick to cutting my lot size in half because of the leverage. So I'm kind of like still doing testing with how far I can push my leverage. I'm doing more research into regulated brokers because since I'm getting to a level like once you start developing that skill set, once you have the skill set of trading, like you start to realize how valuable your skill set is. And, with my own personal, like what I want to do with my own personal goals that I want to do with my life, not with trading. I'm using trading as a vehicle to get there, but it all starts with trading. I'm going to use this as a vehicle to get there, but I can start attracting bigger investors to be able to, because I have the creds, I have months worth of data to back me up now, and I'm continuously building that data, and I'm going to be able to attract investors, and I want to get my license to do all of this type of stuff to like manage people's money, but I want to get like my license to manage people's money. I'm going to open up like my own corporation and be like my own private hedge fund or retirement fund or investment fund. Like if you want to put money in, I'll make a contract with you or whatever saying like, here's my results for the past couple years, and then we start an account with them, pretty much like a bank account, but it's a retirement fund. That's kind of what I want to do because I can make a lot of money with that and make generational wealth and all of this type of good stuff in the financial world. But with trading, like, it all starts with that and showing your results and being transparent, and that's kind of like why I do the things that I do. Even if it's on demo accounts, like big hedge funds, they don't really care because a lot of people, they seem to think that, oh, you have to have these nice things, or you even have to be in a live account. Yes, a live account psychologically is different, but if you have your risk controlled, it pretty much... If you're, you can control your overall risk exposure and, losing a certain amount over certain trades, or you just have your risk management dialed into the T, and you have a winning strategy, it doesn't matter because your psychological problems that you have is mainly coming from because people have too small of accounts. They're trying to trade fucking like $500 and trying to flip that overnight. Or within a week. That's what I used to do until I realized how important it is to be having actual capital to trade with. Like I would say $3,000 or more, like at least $3,000 or more in a trading account to be consistently profitable. But even on demo trades, if you can show over a long period of time, 6 months, very minimum, you'll be able to start attracting capital. Once you get about 8 months worth of data, you're starting to move it from, like, basically think of it as like a novice to intermediate, whatever that scaling system goes. For me, not really a novice anymore. I have 8 months of hard physical data, ledger statements, everything. And I'm trying to attract like bigger capital right now, like prop firms like in Miami, Florida and stuff. That's why all these traders live down there, because they can literally just walk into the prop firm, give them their track record. But it's a little bit different for remote traders. We don't have prop firms that we can just walk in and give basically give them like a resume, which is pretty much just a track record. Like, we can't really do that. Like, we have to do it all through email and stuff like that, and backroom projects. But yeah, that was pretty much this week's results. I mean, nothing really special. I just like to look at, there's really nothing special about like each individual profitable day. Like, these statistics right here, I know that they're skewed. For me, I'm kind of looking at my equity curve of the account. I'm not looking at any of these other numbers right here, like how many days I traded on the account or like the max loss, because I don't use this account for that purpose. Because also another thing I wanted to talk to you guys about was I'm actually going to be switching over to my forex book. I'm not going to be using Ftmo anymore, because I looked into my FX book and I figured out that, like, I didn't know that you can automatically connect your brokerage account, which is really, really cool. So right now this is just kind of like a demo account that I'm using to test it. I tested it for a couple days to see like how everything went. Like, I wanted to see, like, you know, if this was going to be something cool, if this was going to be something that worked, and stuff like that. And so basically I'm going to be using my forex book to from now on, to be able to show you guys my results and everything. And so that's what I'm going to be doing, and I'm super excited about that. And to be able to show you guys through here, like, this is what I'm going to be building, just to kind of be more organized. And I just really like the way that this is set up, because I've been doing a lot of research on this weekend, like seeing how this is working and how this platform works. And basically, like, I can just connect an account to here and basically trade that over as long as I want to, which is pretty much a live account, and I'll be able to see the results, and which would be super awesome. And it would just be so much easier for me to attract these type of contracts that I want to do and everything like that. And I can start to attract the type of investors that I'm looking for. But this is really cool, and I'm going to start showing you guys all my results through this. But that's been pretty much a breakdown of this week's results, because I don't use all of this other data right here. I don't really use it. Like, I don't care how much, I care how much I'm losing and how much I'm winning. Overall, I want to know that I'm profitable. And so the only statistics I'm only looking at right here are my average risk to reward ratio and my win rate. But once again, the statistics don't take into consideration that, oh, with this equity curve right here, this, for this week, I had to cut my lot size in half, because the reason behind that is because I want to keep a constant churn of trades, because I get capped about halfway through the week, because I can't take any more trades, because my winning trades are eating up the capital that I have in the account. So I need to lower my trades so I can keep a constant rotation of new trades. The winning trades and losing trades get out, and then I have a new, keeping everything snappy, keeping everything consistent, and keeping the ball rolling, and having no restrictions on that. And I needed to figure that out, because that was a problem I was having. And so pretty much the statistics don't take into consideration for that, so I don't focus on that. I only focus pretty much on the equity curve of the account, because I'm trying to get a visual representation of these ideas that I'm implementing. Are they working? And so the idea that I was testing and implementing this week was, okay, well, the lot size, to be able to keep it more consistent, so I can keep executing instead of, not being able to execute too much, because I get my capital gets capped at the end of the week. Basically, that was a problem I figured out, and so what I was testing was a success for me for this week, and what I'm going to be doing from now on. But the results overall were not anything special. That was what I was working on this week. That was what my results are of. And that's kind of like why I do these videos, is to discuss with you guys like what's going through my head. And it's also like for me, so I can look back on myself and to see how things are doing for myself and all of that kind of good stuff. But that's kind of this week's results. Everything pretty much that I tested was a success this week. And now that I'm switching over to my forex book to show you guys like my weekly results of how my weekly trades have been, that's going to be so much easier for me to show you guys like my overall, like how, in the type of perspective that you should be looking at my trading style, because I'll have all of the data on one chart from overall for, you know, pretty much like the whole year. It'll all just be one flowing chart, which is going to be really, really nice and you know, very clean and professional looking. So I'm excited for next week to show you guys the results on how that's going. But anyways, yeah, that's pretty much this week's results. Nothing too special. That was what was going through my head. Pretty much the whole week I was trading. That's what I was testing this week. I have nothing else to really test next week. All I need to do is just spend a week of executing and focusing on my trading and making sure that I'm doing everything I need to do. I think that I have everything in place to be able to start figuring out on how to automize it, like how to have a robot. I'm not going to do that myself. What I'm going to do is look for somebody to hire to do that for me. And it is going to cost money, obviously, but from now I think that, like, to make everything easier on me on my end, you know, I think I have figured out the last piece to my problem that I was having, and that was pretty much dimming down my leverage to be able to keep everything as consistent as possible, to keep the factory going, you know what I'm saying? But that's pretty much it. Got nothing else to say about this results. I've said everything that I wanted to talk about that was on my mind throughout the week that I was trading and what I was focusing on. But yeah, I'm super excited to show you guys the results on the My Forex book after this upcoming week. So yeah, I guess I'll see you guys then.